unless you're under, kind of financial constraints or pressure, go out there and find somebody who's successful and shadow them. 0 to 1 May founders have a lot of dreams and visions and what they want to do, and they want to build the world all at once. But as an investor, my role is to help them figure out what's the fastest path to MVP, to validating the product, what should we prioritize first, what should we prioritize last. We want to basically come in so early that even your parents have not yet given you your Ashirwad. He says, we're in the business of being wrong. In every investor's portfolio, there is, if there are 10 unicorns, in their anti-portfolio, there should at least be 1,000.
Yeah.
That's how it's supposed to be. So many founders in India, most of them do not have access to any knowledge about the startup ecosystem or don't know anything. Most of their first experience or interaction with the startup ecosystem is now Shark Tank India.
Yeah.
Right? I would say on average, you would need to take at least 7 meetings with the VC in order to get a term sheet. If you see these last couple bull cycles and bear cycles, right, the projects that have really survived across the board have been strongly on-chain projects. The projects that have died are ones that try to connect on-chain with
off-chain. Welcome to another edition of the Water Cooler Conversations, or the Startup Founders Podcast, as we call it now, from the Builders Club. Today, we have a very, very, very special guest. We've got Vatsal Kanakiya here. Vatsal is the principal and CTO at 100x.vc. He is a Web3 investor at 2AM Ventures and Mehta Ventures. He is an advisor and a board member in multiple different startups. And he has kind of spent, a sizable amount of his time working for different VC firms like Mumbai Angels and VentureCat as well. Welcome, Vatsal. Welcome to the Builders Club.
Hey, thank you so much for having me. Great being here and joining into the Builders Club podcast. So,
thank you. Thanks a lot, Vatsal. Vatsal, I think you have had a very interesting journey, and I think the overall domain in which you basically operate is actually fairly interesting. So we probably would want to get a little bit of an idea about your journey in general. From post your graduation, where all did you work, and how exactly did you land up in 100x.vc? This the story behind the class of 09, which you proudly write on your LinkedIn banner as well. Would want to know a little bit about that as well, and then we'll probably delve a little bit into the 100x.vc journey. You are the principal and CTO, and we'll probably get into that journey as well. So probably we'll just kick it off from this bit.
Yeah. I don't have a very unique journey or something. Did my undergrad in Bombay, in KJ Somaya. Was good at coding, was good at building stuff, was bad at grades, got a couple of KTs, but got the best internships and jobs and projects around. Won a bunch of hackathons and competitions. You know the drill. That's how it is for most devs. I think kind of near to the end of my college life, realized while I'm good at dev and I enjoy it. I enjoy it for myself. I don't like doing it for others, and especially was sure didn't want to do it in a large enterprise where you don't even know what your impact is. And more importantly than that as well, I figured I like being a generalist, right? Like being a dilettante, dabbling in multiple different things, rather than just being pigeonholed as a, machine learning expert or deep learning expert or whatever, right? Or a front end dev or whatever. So kind of took the call that, hey, I'm not going to sit for placements. I'm not going to go for my master's, nothing doing. So post-graduation, spent 1 month just participating in a bunch of hackathons and traveling a little bit since 4 years. Basically had not taken any vacation, just working and studying and stuff. Near the end of the month, one morning I woke up and my grandma was standing with her fingers pointed at me saying, hey, listen, I'm kicking you out of the house if you don't get a job. Look for a job, got it at a startup, but immediately knew that, I was not a good fit at the startup and did not enjoy it. Put in my papers in like 3-4 days or so. Again, clueless, but that's when I got very sage advice from somebody. Said, at this point, unless you're under, kind of financial constraints or pressure, just go out there and find somebody who's successful and shadow them. This is what today people do in a founder's office role, right? Saying, okay, I'll just find a great founder and kind of shadow them. So that's what somebody gave me great advice. They said, don't ask for pay, don't care about work hours, nothing, right? Just the promise is, hey, listen, whatever you do or you ask me to do, I'm going to do it. You don't have to worry about pay. You don't have to worry about anything. Just let me observe you and work under you and be your kind of right hand, right? Knew two successful people in my life, my dad and Sanjay Mehta, who's my uncle, and said, okay, let me figure it out. Want to shadow one of them maybe. Asked my dad first, and dad said, okay, come work with me, and then maybe a couple years down you can do your own thing. I said, great, works. But immediately when my mom went and told Sanjay that, hey, Vatsal's planning to join dad, he's like, no, 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 Vatsal's not going to do any of that. He's joining me. And so, yeah, that's where it took me under his wing and started kind of shadowing him. At that point, I had no clue what he did. I did not understand venture. I did not understand angel investing, nothing. All I knew was he did something in startups. So, started working in the industry, worked at venture catalyst, moved majors for a while, learned the ropes of what startup investing really is. Post that, Sanjay's cousin Harshal, also my cousin, was setting up the family office in the US. So went there, helped him setting up, built my network in Silicon Valley. Just kind of immersed myself in the startup experience. Until this point, I was still kind of like, all right, what's the point of venture? Because I'm an engineer in the end, right? I like building and I like to see productive things happening. Like, wait, मैं सिर्फ 1 रुपए का 10 रुपए कर रहा हूँ, इसमें मेरा काम क्या है, right? And
Hmm.
that's where then Sanjay sent me his vision and his deck for 100x, and I was blown away. And I was like, this is what I want to do. I want to build out 100x with Sanjay. So started with 100x as a founding member. The role was being a CTO there, building internal tech, evaluating tech startups, and helping founders build out their tech. And then eventually kind of evolved into more of a investing plus tech, and now primarily an investing role. It's been a real pleasure for me last 3-4 years. I've just had the luck or the opportunity to observe so many great founders, so many great startups, and observe my team themselves, who are themselves like super people to work with. So yeah, that's broadly been it. So now it's been 3 years, over 3 years now at 100x as a founder member, and could not have asked for more. Now planning out the next steps of my journey.
Nice, nice. Fairly interesting, but a fairly straightforward kind of a journey for you. You were kind of born into this role, the way I look at it. And I think the whole idea of seeing the being a founding member, and because I myself have been a part of a few, is that you see the processes being made and the reasonings behind them, and not just the machinery in itself. And that kind of gives you a very different perspective on how the things operate. And that kind of, because you operate things from a very first principles perspective at that time, I think it becomes easier for you to understand also the inner workings of an ecosystem or a startup in that sense.
Yeah, absolutely. I mean, we've consistently seen from kind of almost day one, 100x receiving a ton of applications. But before we'd even announced 100x, right? Shashank moved to Delhi, I moved to Bangalore. We started laying the groundwork like a month and a half before. We were building distribution, we were building relations, and then 100x was launched. We got hundreds of applications a day sometimes, right? We had days when we had 150 plus applications come in, right? And Shashank and I would spend like all nighters trying to evaluate them, because we want to make sure each and every founder who applies gets a response. And we were consistently, modifying and rectifying and improving our processes, our models, so that our goal was, okay, how can we get each founder their first response within 1 day, or within 24 hours of their application, right? And it's not an automated response. It's one of us evaluating the opportunity, saying, okay, this might be interesting, we want to learn more, or this might not, right? So that front, building a social media strategy, building distribution on that front, consistently reaching out to other investors, building it's just, you're always on, right? And I think the first 6 months or first 9 months, in fact, it was just the five of us doing everything, anything and everything, right? And I mean, that's invaluable. Today we have analysts working with us who take up many of these roles and help us move on to other things. But I look back to those, like, I mean, obviously it's still fairly early, but I can already see kind of how much a process has improved since way back in 2019 when we started. So lots of learning for us. It's really been a pleasure the last 3 years.
Interesting. So, Vatsal, we'll just probably dive down into the whole philosophy and workings of 100x.vc. And then we'll also want to touch upon your role, because I myself am fairly intrigued the role of a CTO in a VC firm. So I would firstly probably get into the inner workings of 100x.vc. How does it differentiate in the plethora of other VC firms which are out there? Is there a distinction also, and where and what's the philosophy of 100x.vc?
So it's very simple what we do. We have a very clear positioning, right? We have a single product, and we're focused on scaling that product, which is basically, we write the first check in pre-seed, seed stage, bootstrapped Indian startups, right? So idea stage and up, right? Idea stage to companies 2.5, 3 crores of annualized revenue. As long as you're domiciled in India, and as long as you're bootstrapped, which you define as not diluted more than 5%, we can work with you, right? We invest the very first check in you. We work closely with you to help you refine your pitch, your business model, your go-to-market, get you clients, partners, connects, broad ideas, shape your company, your narrative, your vision, your pitch, your product roadmap, your tech architecture, whatever, right? Get you ready to be more VC fundable, ready to consume larger sums of capital and scale up. And then we help you get access to a large network of investors and raise your next larger round from those investors, right? That is kind of the broad idea of what we do. So we want to basically come in so early that even your parents have not yet given you your Ashirwad, right? Even before your friends and family said, Ja beta Sohel kar de, hum bolenge yaar, we believe in you. We want to be one of the first. And the idea is, there's a dearth of lead investors, right? There's so many founders and there's so many great builders in this country. But not everybody has the luck to have access to great mentors, great advisors, great investors who can really guide them from day one. So our idea is to be that for everybody in India, right? If you're a founder, you need a lead investor who will stay with you not just for the first round, but for your Series A, Series B, Series C. That's us. We tend to be sector agnostic, but only thing is, we want to be a first check. We want to be a shadow co-founder for you and build the company out with you till the end. Yeah. So that's the philosophy broadly of 100x. We've had a great run until now. Over 100 plus companies have decided or chosen to work with us, and many of them have grown very rapidly, and I'm sure many more will. And yeah, that's kind of our story at 100x. Yeah. I think what was the next question? You wanted to talk about the role of a CTO.
No, yeah. So I basically wanted to understand the processes within a VC firm, because I think we'll probably go a little bit, a very, very layman's kind of this thing, that how exactly does a VC firm operate? Because from the outside, it seems like there's the partners, there are the principals, there are the analysts, and a few others. And usually these three are the main roles. And what are the different roles within a within a VC firm? What are the different processes like? The inbound funnel is huge for you guys. How do you people manage it? And
Yeah,
how do you people, finally make the call?
yeah. So it depends on a VC to VC. Somebody who comes in as early as us, right? First check. We want to be top of the funnel. We want to have massive distribution. We want to have a direct relationship with the founders, right? For us, it is very critical that each and every inbound or outbound is tracked, is taken seriously, and we drive a lot more inbound. We try to drive a lot more inbound applications. Whereas somebody more later down, right, say a pre-series or Series A fund, would ideally want to do more, okay, relationship driven investments, right? A
Mm,
founder has referred them or some other investors referred them because they would rather see a curated set of deals,
yeah.
right, kind of thing. And somebody even further beyond that would see an even smaller clutch of deals. So it's because we're at this top of the funnel, right? We want to be the funnel for the rest of the ecosystem, right? Everybody looks at 100x VC deals and sees credible curated deals, startups that are investable, founders who know their shit, who've been mentored, guided, and are ready to consume, right? So that's why we have to kind of, and we love to look at so many opportunities and work with so many founders. On the process front, broadly, how I can talk about 100x is the way it goes is there's basically a first application form that we ask you to fill up. It's very simple. Fill in your cap table, fill in your pitch deck, and submit it. Um, Once you submit it, our partner Sanjay reviews each and every deal that comes at the top of the funnel. Earlier, it used to be Shashank and me, but we've upward delegated it now. Sanjay reviews each and every deal. Whatever looks interesting, immediately Shashank and I reach out to them. If it's not interesting, we let them know immediately. But whatever's interesting, we Shashank and I reach out to them, gather more details, get on a first call to kind of do the basic checks and balances. Parallelly, my colleague Ninad, who is also partner, looks at the extra details and leaves his thoughts on the opportunity. At this point, we have Sanjay's thoughts, Ninad's thoughts, and mine or Shashank's thoughts on the opportunity ready. And post that, if all of us are interested, we get them on a call to the 100x IC, right? So that's where five of us, Sanjay, Ninad, Yavnesh, Shashank, and myself, all five of us get on a call with a particular startup. And if that goes well, we ask for certain specific information that we have in mind and we invite them to Bombay. And
Mm,
ideally, if the Bombay meeting goes well, we close it on the same day. So that's about a
interesting.
5-step process, and takes again about 3 to 4 weeks, max 6 weeks ideally. That's on the 100x front. But on other investors front, it would be slightly different. I would say on average, you would need to take at least 7 meetings with the VC in order to get a term sheet. And it's a lot longer after that, right? With due diligence, with SHA negotiations, and a lot more. Talking about structures and who works within a fund and who doesn't, I think almost everybody who's in an investing role has the same function. Whether it's an analyst, whether it's an associate, whether it's a VP, whether it's a principal, whether it's a partner or a general partner, whatever, right? All of us have the same roles. It's find great founders, work with them, and potentially invest in them, right? We support existing founders in whatever way you can. Um, see, interact with other investors and help your founders raise from there. We interact with LPs who could potentially invest in your firms. This is broadly every single VC's job, regardless of seniority or what your role is within the company, right?
Got it.
Um, it's just a matter of time as you're able to showcase your ability to work with founders to create value for the fund and for founders to take ownership of deals, to really lead and see them through the end, that you start kind of moving up the rungs. And the higher up the rungs you go, the more the more skin in the game you get, right? You're now getting a part of carry, you're getting a part of profits that the fund I made, right? And at the GP level is when you get that. Many funds might also have beyond this investing team support teams, right? So specific teams focused on hiring or consulting or GTM or ops related marketing, whatever, right? So that depends on a fund to fund, but most funds are not large enough to be able to create a team like that. So it's largely just the investing team that you see.
Vatsal, I basically wanted to understand, what's the role of a CTO? What exactly do you manage in the VC firm, or is it usually the deal flow that usually comes to us, or do you evaluate the startups from a tech perspective?
I do. So
Okay.
it's a bunch of things. From my end, I build internal tech processes. Obviously, like we see 1,500 deals a month. So you have to have some level of tech behind it to be able to,
Yeah.
review that many deals. And we have a portfolio of 100 plus companies. How do you manage those? How do you create more synergies, activate the community? So we have to build in a lot of internal tech processes and products. So that's on me. But beyond that, also, yes, I do evaluation of. I mean, I evaluate all kinds of businesses, but when it comes to really deeply technical products, that's where I have to very strongly take a look, as compared to others. And I kind of go very deep into architecture, into whatever, right? Just to understand what's happening and where the opportunity is. And on the third front is, kind of working with founders post investment on helping them figure out their product roadmap and tech architecture, right? And this comes in, ideally 0 to 1 may founders have a lot of dreams and visions and what they want to do, and they want to build the world all at once.
Hmm.
But as an investor, my role is to help them figure out what's the fastest path to MVP, to validating the product. What should we prioritize first? What should we prioritize last? Sometimes I give product ideas, growth ideas. Sometimes we figure out alternative architectures which would work in scaling the product out. Just multiple things, right? But getting the product from 0 to 1, getting a quick MVP out, validating the product, validating the idea. Um, I work with founders on that. So that's broadly what my role encompasses.
Interesting. So, Vatsal, I basically want to touch upon a little bit on the North Star metrics when it comes to, for 100x.vc, as a from an organizational level, what is the North Star metric which you people chase? Because everything else is a trickle down from there. So, for 100x.vc, apart from the number of deal flows that you people close, what exactly is the North Star metric for you guys?
We don't have a particular North Star metric, that, okay, this is the number that tells us the health of the 100x business. Yes, it is how many applications we get. Yes, it is how many we've invested in. Yes, it is how many companies are alive, how much they've raised, what is the number of jobs they've created, what is the revenue companies are generated in total. There's a bunch of things. I don't think I would be able to give you an exact North Star metric, one that defines the health of our business in
No, it's
totality.
it's a very interesting thing because while you were thinking aloud, I realized that it's not. So your approach is never from a business perspective. It's also about the relevance of the 100x.vc brand within the startup ecosystem, and the kind of inbound that, or the kind of credibility that the brand holds, that also has a very valuable element when it comes to the overall the metrics that you usually track. But that's a very interesting point. This is something which is fairly new to me. Any light you want to throw on that, or we can?
Yeah, so we do tend to measure effectiveness of brand, and so we tend to think of this in terms of distribution, right? um, See, there's, like I said, there's so many founders in India. Most of them do not have access to any knowledge about the startup ecosystem or don't know anything. Most
Mm,
of their first experience or interaction with the startup ecosystem is now Shark Tank India,
yeah,
right?
I agree.
um, how can we have such strong distribution, such strong brand recall that the first thing anybody's starting up anywhere in India, right? The first thing they think is, okay, I need to work with 100x to build this
Mm.
out, right? That's the idea, right? And we want to also be able to support each and every founder coming
Yeah.
out of India.
Yeah.
That's
No, that's absolutely.
that's what it is.
So I think PR, events, partnerships become very integral. Moving on to some of the pointers which is very valuable and useful for all of the people who have joined in and all of the people who will be listening in the podcast when we release it as well, is from when you people are evaluating startups. I mean, I guess this is the most oft asked question. What do you guys usually look for? And I usually wanted to add a little bit of our spin onto it. Is how many times have you? I mean, was this usually a lot of the decisions are driven by gut, right? Because you people are investing at such an early stage where only the founder's biodata is the proof in the pudding majority of the times, apart from the usual market intelligence of the industry, whether the industry is growing or not growing. That's the other indicator for you guys. But how many, I mean, about you have a historical data now of the different companies that you people have invested in. Was the success rate been for you guys? As in, number one is of course the eligibility criteria, and number two, how many times have you people? You don't have to give me a number. How many times has your gut instinct been right? Let's put it that way.
um, Tough for me to quantify that because it takes at least 10 to 15 years to know if you were right or wrong
Oh yeah, that is
in the
also true.
VC game. Um, I mean, it'll take at least 10 years for an investment to, if they have to go public, they'll go public. And then maybe another 4 or 5 years post that to really win the public market over, show profitability. And so it's a 15-year journey at the bare minimum, right? Zomato is still
Wow.
fighting it out.
Yeah.
So you never know if you're right or wrong. Really, it's a very long-term game, very tough to measure. But there's a quote by Chris Sacca. He says, we're in the business of being wrong. In every investor's portfolio, there is, if there are 10 unicorns in their anti portfolio, there should at least be 1,000, right?
Yeah.
And that's how it's supposed to be. Um,
Mm.
you know, it just means you have had access to the best deals, which we've had. We've missed a bunch of great deals um, that we couldn't take a call on, right? But that does not mean, that you're a bad investor. It's
Yeah.
just a very tough game to play
Yeah.
anyway, right?
Yeah.
It's in the end, it's about kind of playing the long term games, staying solvent long enough that you're able to see those couple victories come through. It's not about the 50 losses you had, right? Companies you missed out or companies where you invested and they die. It's about the two winners that you are able to find in the end, and that hopefully are able to turn your life around. That's
Yeah.
what this is.
Yeah. 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 That one company which basically makes up for everything else.
Everything else, yes. In
Yes.
fact, there's a blog, I think, by AngelList, which says that after a portfolio size about 150, there's a very high chance of at least 3xing your money, right? So the larger the portfolio at an early stage, the better it is for investors, right?
Mm.
Because it's the one outcome, right? One outlier hit covers up for 149 losses. It's like that.
Mm. 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 Mm.
Yeah.
Interesting. Interesting. Cool. I'll probably move on to the next segment, which is the Web3 ecosystem, because I think you have been kind of the spokesperson for the Web3 ecosystem. You're also partner in 2M Ventures and Mehta Ventures, and you are the Web3 counterpart of these ventures. So would wanna probably start off this section with a little bit of your thoughts on what's going on in the Web3 ecosystem, yeah? Because I think 2020, 2021 were very different times, and 2022 and 2023 seems to be like one of those downtimes in the sine curve.
Yeah. Yeah, you're correct. This is a bear cycle we're in, but
Mm,
that's fine. Everything
yeah, yeah,
is cyclical, and Bitcoin has already been through four now. I think this is the
yeah,
fifth
yeah,
bear cycle it's going through. I don't see any cause for concern. What happens is every time you get 1,000 new people coming in during the bull, and maybe 900 of them leave, but the 100 that stay during the bear, right, become real believers.
yeah.
Um, right? So I'm not too concerned about that. I think it is important to remember at the end of the day that one Bitcoin is one Bitcoin, one Ethereum is one Ethereum.
Yeah.
Um, for I mean, at least to me, the dollar value matters little less. My thesis, and maybe we can talk about that later if we have time, is on building a digital economy where the velocity of Ethereum or Bitcoin or any other cryptocurrency is so high that people don't even think about off ramping it to fiat currencies. Right? The idea is let my Ethereum stay Ethereum, let me just transact through that.
Yeah.
So I my focus is on investing in companies that create a digital economy, create velocity
Mm,
of money for Ethereum, for Bitcoin, Solana, for
mm.
Cosmos, whatever, right? For Neo, it's little less about okay, what will drive up the value of a particular coin in dollar terms.
No, no, this is absolutely true because I think majority of the it's the whole Web3 ecosystem itself is in a very it's evolving with time. Even if you look at the different kinds of companies which have come up, and it shows the different use cases which are slowly being covered, lab by lab, right? So. In the initial, I mean, I guess till now we had been living in the phase of exchanges where the cryptocurrencies were more known rather than the blockchain or the technology behind it, right? So till now, I think we have not. I mean, there are a few which have been working behind the scenes around the whole IoT and creating, utilizing the whole ecosystem within the supply chain ecosystem and I guess the whole DeFi ecosystem, DeFi, this thing revolution has also come that has also kind of stayed into this thing. But I think now we are slowly moving on from the idea of it being just the digital gold or digital silver kind of a mentality into actually starting to transact it within for certain kind of resource. I think NFTs were a great starting point for that. But I think again, the way the NFT ecosystem was again I think people missed out or at least have been missing out on the point of giving it a number and then again making it into into a trading card.
Yeah,
It's much more than that. And
yeah.
I think communities and DAOs as they come in more, I think the utility of these ecosystem or these things will become more and more prevalent. What do you think?
I think for the next 10 to 15 years, we should not be thinking about, uh, you know, IRL use cases for crypto as much. Rather, the focus should be on creating uh, online utility. Right? You must be hearing this hype about the metaverse. There'll be
Yeah.
a 3D world where people will hang out. What I'm seeing evolving is, most people talk about, okay, Meta creating a 3D social network or something, right? Which you have to wear VR glasses. What I'm seeing is, there are these games, for example, Topology GG or Dope Wars or Dark Forestry that are putting in-game physics on chain. Um, like entire computations of state changes of logic are happening on chain or written on chain, right? So let's say if I'm making a punch like this, how does that change the state? That move is recorded. All of that computation happens on
Interesting.
chain. Why is that? And that is enabled only because of ZK rollups, right? Because we have very powerful compute. This is all currently being built on Starknet. But why is this interesting? Because now you can write an immutable set of physics logic and put it on chain, and any game can use it as a shared asset, right? So let's say you have one chain with one shared set of physics, right? And then you can have Cricket 07, you can have FIFA, you can have Modern Warfare and Halo built on the same layer of physics. What that means is you'll be able to take your character Virat Kohli from cricket to football, then
Wow.
have him shoot people in Modern Warfare, and have him take the Modern Warfare gun and go shoot people in Halo, right?
Wow.
And that happens because the physics, the core logic is the same. So assets become interoperable and
Interesting.
immutable, more importantly, right? The logic is immutable. So this is like in our world, right? Like the real universe, you have that immutable law of physics, right? That speed of light is only 300,000. That's how you will see chains. And so people will, that is what I think of as the metaverse, right? Where there'll be an interoperable digital economy, multiple chains, multiple games. You're moving around, doing various activities, and ideally there will be businesses on chain. For example, a very simple example, right? If you want to earn on chain, um, what you can do is you can create a there'll be a DAO which does customer support. Right? Very simple. Why is this needed? Because okay, that's another thesis, but just briefly, it is not for companies to maintain projects. They can't rent seek, right? In the Web3 space, there is no rent seeking, right? Once I've launched the Uniswap protocol, I'm not getting a percent of swap fees every time, right? That's not what happens unless you are holding governance token. But even then, they've not turned on the switch. So rent seeking never happens or very rarely happens in Web3 space. So it is not in a company's interest once they've launched a particular product and it has gained accrued value as a token to say have customer support on the website and help people understand how to do it. Now, can you create a DAO, an on-chain DAO, which says, okay, I'm staking my money as Sohail. Sohail is staking his money and ready to become a customer support agent. And anytime somebody puts in a query, Sohail helps them out, and all of it is recorded on chain. Okay, this is how you use Uniswap. This is how you use Aave. This is how you kind of start playing what's the name Axie Infinity. And then every time you help somebody out, as long as you've done a good job, you'll get rewarded in tokens. Or if you try to mess with others, you get slashed, right? And then these tokens you now start using them to buy utility NFTs in certain games, or you buy online media content. So you're consuming, which is now being produced by somebody else who earns money and you submit. That velocity of money starts happening, right? And I'm sorry, I forgot where this topic came from, but that's kind of my broader thesis. Is I don't I don't see if you see these last couple bull cycles and bear cycles, right? The projects that have really survived across the board have been strongly on-chain projects. The
Yeah.
projects that have died are ones that try to connect on-chain with
Off
IRL.
chain.
Um, and I'm not saying that's the rule, right? There's every possibility that the next wave is when IRL use cases might actually work out. But my stronger bet is on building on chain first, building a 10, 20, 30 trillion dollar economy on chain, right, where the velocity of money is for Bitcoin, for Ethereum is very high. There is real value for people who want to live on chain in that digital economy. And then you're not talking about speculation anymore. Right? Then nobody's talking about the dollar value of Ethereum or the dollar value of Bitcoin because it has value on chain. It has inherent value now, right? And then you can start thinking about how do we bring it into our current financial system. Um,
Mm.
so kind of that's the broader play happening in my. I have a bunch of other ideas, but I don't want to. So what anything else that you
No,
want
no,
to?
this is very helpful. And this is very interesting because I think this kind of leads on to my next question is when you are evaluating Web3 startups, what is the North Star metric that you looking for? Because I think the DAUs and MAUs wouldn't count here. I think the number of transactions that happen within the ecosystem or the engagement becomes the right metric for you to evaluate. I mean, I just want to eat your brains or understand how exactly if let's say a Web3 startup comes for you for investments, how exactly do you go about evaluating that?
Depends. It depends on the kind of company, right? Maybe you can give me an example of a company you want me to, an existing company, and I can
Okay,
give
so
you thoughts on how.
okay. So I think there is already Chirag here. He can actually pitch you his company as well
Okay, you
because
wanna,
he's in the
Chirag?
NFT. Chirag, do you wanna do that? Do you wanna tell
Uh,
about what you're building?
sure, sure. In a way, like what we are doing, we are actually tech catering to IRL use cases. So the primary premises of our entire startup is that a brand issues something which could be valuable. It could be a loyalty program, it could be an event ticket, it could be anything. Doesn't really matter. So now giving your customers power to trade it on chain, so that now you actually own it, and then if you got a 500 rupee of discount coupon, if you got a 10% discount coupon, or you have got a like a VIP access to somewhere, it doesn't matter. If once you have that, it should be truly yours and you should be able to trade. And that is where we are. This is what we are building through NFTs because,
Got it.
yeah.
Yeah,
So,
so yeah, basically the idea is if you're making a purchase or something, how do you provide at the point of purchase a unique NFT which can then have other utilities, is what I understand, right? Great. So Chirag, in this case, I think the large, so this is a B2B play, right? So
Hmm.
I'd be keen on here seeing what is the benefit that the business is getting out of it. Is it leading to the business getting the ability to target its customers better? For example, okay, I'm giving my most loyal or high ticket customers a specific NFT. So which means anytime I want to figure out, who my high ticket customers are, I just check who has those particular NFTs, right? That is one way. But obviously, if it's tradable, it's not soul bound, then it doesn't work, kind of thing, right? Another possibility is, okay, you want to create a sense of community or a sense of belonging or an exclusivity, right? So this is something that credit card companies do a lot, right? They create these co-branded cards, where let's say you're a fan of Batman, right? The reason you'll get a credit card with Batman branding is because you're a fan of Batman, right? So now the card company and the banks know that whoever owns this credit card, right, um, is a fan of Batman. Hence, they're going to be a sort of homogeneous group with similar interests, similar age, taste range, whatever, right? Kind of thing. And so they don't have to worry about changing their credit card plans as much or as often for you. And you're in it because you want to showcase the pride of belonging to the Batman community, right? Kind of thing. So if you see other credit card programs, they banks generally have to keep changing them every 2.5 years. They have to keep changing the rewards because people start learning how to game the system, right? Game the incentives. But if it's a co-branded card, people generally don't game it as much, and they're okay with even lesser incentives, right? Kind of thing. So anyway, but my point being, in this case, I would probably want to find a way to measure or tell a story about how our business is benefiting from this NFT. That would be the most important aspect for me in validating the hypothesis. Our business is seeing value. If not, this is all a moot point. It all falls down like a pack of cards, right?
right.
And then the next step would be obviously talking about friction. How do you make the user experience easy? How do you make it easy for users to actually gain utility from NFTs? Are you seeing users engage with this or leverage the NFTs frequently? If let's say you've given out 5,000 NFTs over a year, but only like three of them have been activated for some utility, then the business is not getting the value. It's like, Domino's sending out coupons to millions of people, but only 100 of them actually use it, right? The whole funda of Domino's sending out coupons is they want people to buy, right? And they're okay with losing a little bit of margin in order to drive up volumes, right? So now, is that happening with you or not, right? So post launch, that would be what I'd be looking at. I hope
So
that gives you an understanding.
yeah, it does. But just to answer a couple of your question, so the first point you raised was, so let's say there's a high ticket customer, and until unless it is not a soulbound token, then brand will not be able to identify it anymore if someone trades. So we are actually taking a very opposite approach to this. We are saying that as a customer, I have always been a high ticket customer to a brand. Now in return, brand is giving me something. Now it should, like, so as I said, Web3 is all about giving more power to the customer. Now it is all about that. Now I have earned this award from the reward from the brand. Now I should have the power to trade it. I've earned by showing my loyalty over the last 5 years or whatever the condition is. I have gained a, let's say, a lifetime 20% discount on Adidas. Now getting and let's say there are no terms and conditions. I can go in and I can buy anything at 20% discount, irrespective of how many times.
Sure.
Now that token itself will have a value. And because most of the things we are actively trying to convince businesses are that whatever utility you are providing, put that utility for eternity or maybe for next 10 years, so that that NFT in a way sort of becomes a security, and then the value will be like maybe 100x, maybe 500x the original value of one-time use. So it is not from a brand's perspective, it is rather than from a customer perspective. But where the brand will earn from this is that because everyone wants to be a customer first brand nowadays, that if you are not
My
becoming
only comment here will be, Chirag, in the end, your customer is the brand. You have to build for the brand. You're not building for the end customer. Okay, the end customer wants to make money from the brand and all that. Yeah, it's important, but that's if the brand wants to give that. You have to build what the brand wants to. But appreciate your work. I'm sure you'll uh, find a way and grow fairly rapidly.
yeah.
Usually, when it comes to industries, you basically look at the market opportunity, the market size, and the founding team, and whether there is a founder market fit and what kind of. Because I think in the early stage, traction does not matter that much for you guys. In the Web3 ecosystem, how do you evaluate market sizing? Because there are n number of different applications which are possible. It's a blue ocean right now.
Yeah.
Right. So how do you fit that framework in the Web3 ecosystem?
Sure. Yeah. So I have a thesis called on-chain, off-chain scarcity, on-chain abundance. What I mean by that is anytime you're doing something which is trying to do IRL plus on-chain, which is off-chain plus on-chain, then you're going to be limited by geography and hence limited to India as a market or Southeast Asia as a market, right? Because every geography will have its own regulations and it's only going to get tougher to navigate over time before it gets better maybe later. But if you're purely on chain, there is abundance, right? Anybody in the world can be a client as long as you're not going off chain.
That's a very interesting point.
So there is, while ironically, Bitcoin is supposed to be, or Ethereum or crypto is supposed to be a scarce asset, right? Yeah. But it creates a lot more abundance of market on chain. How do I evaluate a market? It really depends on the project, but let me give you a couple ways to think about this, right? So I believe like on-chain projects are different from the company we invest in, and both accrue value in very different manners. The on-chain project accrues value through consumption, through usage, etc., 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 right? So in those cases, you want to see if if there is a need for this or not, and will there be a need for it? For most of these projects, they're actually market creators, right? You don't really have a market until people realize, okay, this is cool, right? I mean, the very first, basically the genesis of the NFT revolution was CryptoKitties.
Yeah.
Right? And CryptoKitties, I mean, you couldn't say the market size for NFTs or CryptoKitties back then. And I don't believe you can even today, right? Very tough to design. The value accrual in projects, though, does not reflect the value accrual in companies. My belief has been that every company, see again, like talking about this, right? Every company builds a project, gets a lump sum amount from the project, and then moves on to other projects. There is no rent seeking in Web3, right? Okay, and because I've made a certain project, I should consistently be earning money from that, right? So in effect, every company is like a venture building or a AMC kind of thing, right? So when you're investing in equity in a particular company, you're basically saying, okay, this company has the opportunity or the possibility of building multiple unique different projects, and hopefully one of them really scales up and accrues value in the token, right? When you're investing in the project itself, the token, direct token investment, then you have to think a lot more on the market. Right? So if you're betting directly investing on the team into a company, the market size matters, but not as much, because the team will always have the opportunity to churn out other projects and hopefully one of them clicks, right? And so if let's say the team first creates a small project whose token market cap becomes $50 billion, right? And the team owns, let's say, 20% of tokens in supply, that's about $10 million of value accrual. But the next project ends up being a $10 billion market cap project, right? And they own 15% of that. They have $1.5 billion, right? That increases the value of the company drastically because it's an AMC with over $1 billion in assets. So that's kind of how I think about it, right? You got to bet on great teams which have the capability, as long as these are teams building, on-chain products, right? And on-chain projects. You got to back great teams who have the capability to keep innovating and keep building multiple products. And hopefully one of them clicks and really scales and accrues value. If you're investing directly into the project itself, then that's a different matter. You have to look at kind of value accrual, kaise hoga, how will pricing happen? For example, let's say, it's an AMM, right? So you might get a percent of the swap fees for anybody who's owning a particular token. So let's say it's the token earns $0.50 of swap fees every day. That's like $170 a year. If I price it at $10,000 for the token, then that's about, or $1,000 of token, then it's about 17% of yield every year that I'm getting on the token, right? Kind of thing. Then basis that you can kind of play out, okay, basis the yield, kitna price karenge log? Will this be $1,000 token? Will this be a $5,000 token? And given the supply, you can give, say, okay, this is the market cap. के largely अगर 20 million token है और उसका per token value $5,000 होगा, basis the yield possible or the value creation possible, then this is the price that makes sense, right? Yeah, if I enter at a 5 million, I'm getting a 50 million, right? So it's just a matter of getting the right entry price and then hoping that the exit price comes in the range you were expecting. That's how I think of it.
Got it. This is a very, very interesting take. I think there are already quite a few hands up. Now we'll basically move on to the Q&A side.
Hey.
Hi, good morning. GM is what we say in the Web3 ecosystem,
Yeah,
right?
yeah.
So,
GM.
my idea is very simple. I feel that, Web3 will not succeed until and unless first we have a cost advantage as compared to our centralized database and server, or we have a real life utility of the NFT, or third is something that there is a narrative, like an epic calling. What do you think about that? And just to give you an analogy, I mean, I'm not considering this as a pitch to you, but yeah, I'm building an app called Satyu, and a religious metaverse app. And I think religion, politics, entertainment, sex, leverage has all been going through a time immemorial cells in India. The idea is that we create campaigns which invoke human consciousness. Just like, I'm building a campaign in which Lord Hanuman comes on your screen and just screams, Vatsal, jaldi utho. Hanuman ji hu main, mere Ram ji ki madad karo, main Ram Setu bana raha hu, meri Vanar Sena bana rahi hai. Let's pick a stone and keep it on the Sena, on that Ram Setu, so that my Ramji can actually cross over to, Lanka, kill Ravan and bring Sita back. Like a narration. And then, you just pick up that stone, which is nothing but an NFT. You put it into the Setu stops trembling from the ocean currents. And then the Hanumanji again comes in and says, oh, बहुत बढ़िया, आपने बहुत बड़ा अच्छा काम किया. क्या आप इस पत्थर को अपने घर पे भी चाहेंगे? And then, if you say yes, then you would just go to record your name and number, which is another form of data monetization. But at the moment you say yes, and you actually put that pathar into the setu, then there is patakas, and say, aapne bahut bada nek kaam kiya, Ram ji ki madad kari, and all that stuff. And then, okay. And then you see that patthar, which is like amongst millions of other patthars with a unique ID. And then, on Diwali ki raat or Ram Navami ki raat, you can actually claim that patthar. We send it to you by WhatsApp. You got to download the Satyug app. And then, you just use a generated password. And then you mint an NFT with that. And 90% of the people would love to do that because it's a narration towards helping the higher cause of humanity and, Lord Ram and Ram Lalla, which everybody's, or maybe could be something else, But the idea, what I was just trying to project here is that I think Web3 is just what is lacking is, in my opinion, either a real life utility or cost competitiveness as compared to a centralized database, which I don't think we will actually achieve for a very long time in Web3. And the third thing could be a narration that could actually give some epic meaning or the inner calling कि यार वत्सल बेटा उठो 7 बज सुबह की एक रिंगटोन आपकी कि राम जी की आरती का समय हो गया टायर टू पनवाड़ी के हिसाब से सोचो थिंक अबाउट द नॉर्मीज ऑन द स्ट्रीट्स वी कांट जस्ट बी thinking like between devs and devs like echo chambers and between we've got to think about how to enroll the next billion users. What do you think about that? Please tell me.
Interesting question, sir.
Okay. So
that's what I'm building. That's what I'm actually building. I have an MVP also ready. That's
sure,
not a pitch deck, but yeah,
sure.
an update. Yeah, sorry.
No, appreciate your question. So here's the thing, right? I can talk a lot. So, okay, why I believe Web3 will succeed, and or just in general, I don't want to use terminologies, Web3, crypto, metaverse, whatever. I'm just kind of using it as a catch-all term for now. But broadly, the idea here is the monetary system right now is kind of messed up, right? If you've so the basic way how this works is right pre 1945, pre World War II, right? It used to be every currency or every fiat was pegged to gold. Then at a certain point, everybody had to depeg because economic crisis. They wanted to print more, but gold reserves were low, so they couldn't, and so on. And they depegged it, and the world economy was chaos. Currency, monetary market was in chaos. And then 45 Bretton Woods happened. What basically happened on that day is, the US said, okay, the dollar is pegged to gold, and then all the other currencies, all the major currencies in the world are pegged to the dollar, right? So, in effect, what they also did was, okay, nobody in the US domestically could exchange dollars for gold, but globally, if you had dollars, you could exchange it for gold with the US Fed, right? So in effect, what happened is dollar, they tried to create kind of the, the stable currency or the global reserve, which quickly kind of started to fall apart as a story because the US can have only so much gold and hence can print only so many dollars. Now, when you have a limited amount of dollars to print, you can't satisfy what domestic and global needs, right? And so as global needs grew, because GDP outside of the US grew faster than it did in the US, so people started wanting more dollars. US was unable to provide that, and hence, am I with you guys or did I lose you all? Okay.
No, we can hear you.
Sorry. Yes, I was saying people started losing confidence in the dollar, massive sell-offs. People started buying back gold, and the US said, "Okay, I don't want to sell all my gold away." So they unpegged the dollar from the gold, right? And it was supposed to be temporary, but it became permanent, and everybody depegged. It became a floating currency, right? So at that point, now currencies only have value because the government has mandated it has value. But what is actually different is the thing that really made the system work is the petrodollar system, right? Basically, the US went to Saudi and all the OPEC countries and said, hey, if you sell your oil exclusively in dollars, right, we'll give you military protection, right? And what happened post that is, okay, all countries had to have dollars to buy petroleum, but they said, okay, I already have dollars around. Why don't we just trade everything else in dollars? And so there became a whole global economy of dollar trade, right, which was meant to be only petroleum. What this allowed the dollar to do is to have basically effectively be backed by the petroleum price, right? It's effectively backed by petrol. And because now it's not backed by gold, which is scarce, right? They could print as much as they want, right? And so now the monetary supply could grow to satisfy both domestic and global needs. But again, you have to understand, because the monetary supply is growing so fast, and you have to send out a lot more money outside because the global GDP is rising faster than domestic. The US government is always in a deficit, right? They're always spending more than they're earning in order for the international order to work, for the globalized world to work, right? But this also system worked because anybody who had a trade surplus with the US ended up investing it back into the US ecosystem through treasuries, right? Through bonds, US Fed treasuries. Um, Money kept recycling, so the deficit grew slowly, right? Not too rapidly. This changed first with 2013 when China said, all right, I'm not going to reinvest money in US treasuries, and just started investing in projects around the world through OBOR. And second, with 2020, massive flight to cash, everybody started selling off US bonds, and the Fed had to come in, buy a lot of bonds, print a lot of money. Now the Fed owns, like, this is historically the first time where the Fed owns a majority of US Treasury bonds, right? And it started coming back a little bit, but now more recently, again with dollar prices rising up, there's a massive flight to cash again, right? And I don't know if you've heard of it, there's about $57 trillion of sell-offs happening in the equities and bond markets globally. This is as compared to the GFC 2008 recession. There was only $10 trillion of sell-offs then, right? Because the bond market held. Now even the bond markets are dead, right? Why is this important? Basically, money is not being recycled into the US ecosystem, and the Fed is going to have to keep printing more and more now. And the more dollar there is out in the world, right, the lesser the confidence people have on the US as a global reserve, right? Because I mean, it's just something that's unlimited, extremely inflationary, printed, unlimited, and it's not a system that is sustainable, right? And it's devolving very rapidly. So in the short, intermediate to long term, I am bearish on the dollar. The opportunity here is if you have to create a global reserve, right? It can't be a domestic currency. If it's a domestic currency, you will have the same problem that you had with the dollar, right? Because global demand will always rise faster than domestic demand, and you will always be in a deficit, right? So either you create a basket of multiple currencies, that is one opportunity, that's called the Bancor idea, or you use a neutral third-party asset like a gold, or in this case, a Bitcoin, right? Could become, and you've already started seeing Iran. So in the long term, I believe most of us have realized that the monetary system, the economic cogs are breaking, and it's going to shift to another system. While it's not necessary that the Bitcoin becomes the reserve or becomes the basis of the next phase of the global economy, it is a possibility. So, which I am very bullish on. Specifically to Vec3, I am aligned with you. I think it's too early to be pushing for real world use cases yet. Like I said, utility has to be on chain. We have to create a digital economy first, right? Where people are spending 3-4 hours online, and we're already seeing that, right? Most of your day you're spending online. How do you kind of translate that into consistently spending time online and spending and using and buying and earning Ethereum without thinking about its dollar value, right? The problem today is when you talk about, for example, I think he also spoke about the cost of the blockchain, right? If you're thinking in dollar terms, it's always going to be costly. But that's because the dollar is weak in comparison to Ether or BTC, right? But if you think in BTC terms or ETH terms, right, it is like 3 GWh for gas. It's nothing, right? And so the idea is, I think the more we move away from thinking in dollar terms, the lesser we will be thinking about what is the cost of these transactions. And we're obviously with roll-ups and consistently evolving technology, we will find ways to make it even cheaper to process more, to run more transactions, to run more operations. It's a matter of time. I believe in it. But yes, if it has to work, my belief is we need to first create a digital economy where people are spending money, spending time, lots of velocity of money. And then once it's a certain size, there'll be pushback from those living or having significant value in the online world, saying, okay, I want to start using this offline as well. And I want my value approval of online to also reflect online. The other thing I would say is no monetary system it comes out from the people. It is almost always an institution that forces a monetary system. This will be the first time that this is a monetary system that is coming from the people, right? Either it was backed by king or by God or by some nation state or somebody, right? Gold is the first one, and this is the second one. So it's a very uphill task that we're fighting. It's a 20, 30, 50-year game we're playing, right? We can't, humans tend to underestimate what they can do in the long term and overestimate what we can do in the short term, right? So we have to really think long term here, right? Like most of what we think will happen in the next 3 to 5 years, it's going to take at least 15 years, but it can happen with consistent efforts. So that's how I think about it.
Sumit, you're on mute.
So I completely, not actually 100%, but 100,000% agree. We are at the end of the long-term debt cycle. We as Web3 enthusiasts, we know this, what's coming down the road. The idea is to, educate people, the people on the streets. And this is what my core thesis is. How do you do that? Because people are oblivious. Normies in the road don't know what the F is. Okay, we know what the F is, what happened in 1971. When Richard Nixon, debarred everything from the gold standard. But how do you educate the people in the normies in the roads? That's what I really want to do. Educate people to understand that, this debt to GDP ratio of advanced countries is so high, it cannot be repaid back.
So Suvit, it comes from the top.
How do you onboard them? How do you onboard them?
It comes from the top, I think.
So I have a take here. It's usually if you look at the technology adoption curve, it's a very, very basic concept, but I think it still holds the test of time. I think Web3 ecosystem in itself is at the innovator stage right now. We cannot think about going into the early majority and the late majorities at this stage in time. I think it's too early, and the ecosystem will evolve with time. We can't push. So you can't push the chasm on the other side, on the right side by yourself. It'll take its own sweet time. And I think right now the best thing, which I think Vatsal is also pointing out, is I think if you're able to build an on-chain product, that means that whoever is on board, they are using it. At least you have a POC right there. That people who are already a part of the ecosystem, they know how to use this ecosystem, and your overall philosophy or your white paper basically works, and then I think as time progresses, the question, the time would be when you're onboarding the people who are novices in the ecosystem. But I think right now, people who are already there, you will have to basically onboard them. That's my small take. Any thoughts on that, Vatsal?
Or else, I think people will just get to know once the credit collapse happens, actually for real, in the UK, and the government is not able to do anything because Liz Truss has also resigned, or maybe China actually goes into a real depression and they comes out with real figures. We will get to know. This decade is all about cumulative shift. It's tectonic shift happening. It's the acceleration period now.
This decade has really, I'm still amazed. We are just in 2022. This is just 2 years. Okay, this is just 2 years.
Exactly.
But, so thanks a lot,
and
Suvit,
it's accelerating, Suhail, and you and I know this. Vatsal knows this.
It'll take time, bro. Hello. How's it going, bro?
Yeah, it's going good. Just fresh off a hackathon, we got into an incubation kind of stuff. So yeah,
So Suparno has been building in the Web3, one of the very early builders in the Builders Club, who has been evangelizing and building within the Web3 ecosystem. They have actually won a few hackathons as well. And which one are you
The latest
involved in
one,
now?
the latest one was ETH Global. So we won a few prizes.
Hey.
One was for best use case of Taylor, which was an Oracle. One was for Tableland, which is like a database, very new product. They are building on top of IPFS, the storage layer of Web3. And another one we got from Covalent. Covalent is like an API which actually uses like indexes on-chain data, and then people can use that to query and build their products, which we used. So what we are building is currently kind of, you can say, a notification OS of Web3. So actually I used to do swaps on 1inch during this whole free fall during the bear market 3-4 months ago. I used to swap like the stronger currency against the weaker currency, and sometimes I used to put limit orders and used to forget that I have put a limit order, and as a result of that I used to lose money. So I always wanted something like a Zapier kind of stuff where I could make a task like, okay, when this limit order expires, at least email me or send me some kind of a message or notification. So basically I'm building that. So like you can set on-chain like events. Let's say you want some wallet transactions that needs to be tracked, so you can track like your wallet and a particular currency like USDC, and whenever your wallet gives USDC or has deposits in USDC, you would get an email like, yo, your wallet has received some amount of USDC, here's the transaction hash. So we are also trying that's what we built in the hackathon. Now after the hackathon, we because we are using Tableland on a lot of ways, they got us into their incubation project, which gives them some small amount of grants, and so that we are encouraged to build on top of their product basically. So now we are trying to find more use cases. One of which has come up as like people browse and OpenSea a lot to snipe the floor prices of NFT collections basically. So we thought, why not have like a notification template where people can say, okay, this is the contract of this particular collection, and whenever the price reaches this point, I want an email so that I can go there and on OpenSea and buy that particular like NFT. One of that, and also like tracking in a similar like way, tracking token prices, or even like snapshot votes. Like let's say someone wants to get like is very nervous about some proposal and wants to get notified immediately like if some proposal has gone through or not. So yeah, my question to Vatsal would be that how like you would say monetizing a very early stage product would be good, or even thinking like, because for Web3 products, if I like say go by launching my own token, that's like a lot of work and a lot of legal help and like incorporation and all that. In opposed to like in Web2 world, I can just have a Stripe page where I can just do some subscription like $10 per month. So what is your take on that? Like in an early stage, or even like in a long-term way, what view like you have on this?
No, I mean, from what I heard, seems like you're more of a SaaS kind of a play, right? So I think a subscription SaaS play makes a lot more sense than doing a token. Tokens are valuable only if everything is purely on chain. You know, governance is on chain. All your code runs on chain. All your oracles, everything is on chain, right? There is nothing on AWS's server anywhere, right? Once the smart contracts are there, it's there, right? Once the DApp is out, it's out. Then it makes sense to have tokens associated, and you would have to build the right tokenomics. You would have to build in the right incentives and right engagement within the DApp to be able to accrue value for that particular token. Very tough to do. Tokenomics is one of the, forgive me for my flowery language, but one of the most fuck things to do. It's very tough to predict what works, what doesn't work, and building great tokenomics is an art in itself. In your case, it feels like SaaS might just be the better way to go since you are not that strongly on chain. I think it's very valuable to monetize as early as possible. The idea is, I would rather see 10, especially since you're in a SaaS kind of a play, I would rather see 10 customers who love your product, high retention and willing to pay, rather than 100,000 free customers and growing 50% month on month. Right? Because then I know that for those 10 customers, you've really created value. And then I can just check if, okay, are there other customers in the world, other people in the world like those 10 customers who would want to vehemently or fervently pay for this particular service, right? It's a really good vote of confidence in your favor. So if you're able to monetize early on, get those early evangelists, even if 10, 20, 50, whatever, right? It's a lot more valuable than having 100,000 free users.
Mm.
I
And
hope
also
that
like
helps. Yeah.
if I want to talk more and want more feedback from you, how do I get in touch with you?
I'm at Vatsal at 100x.vc. I'm putting in my email here, and I have my Telegram as well. I'll put that in here as well.
Yeah, then I will probably DM you on Telegram. It's much more easier to carry
Perfect.
a conversation.
Perfect.
So
Please, sir, go ahead.
grateful for this. Suhail, thank you for this. Vatsal, it was really insightful for me, and I'm actually popping up with a lot of questions. One basic question which I have is because building from where you left off, because gold is not a standard and currencies are fluctuating. Say, for example, I want to have a platform in which I want investors cross-border trade investments. Can I enable that in blockchain? Because there are two risks which I'm actually regulatory and compliance risks which I'm mitigating. One is the dual taxation, and second is this currency fluctuation. So FATCA and all are FATCA. FATCA and all are actually killing the way that I can think about it. So hence the question: is there a way where I can enable my trade in blockchain?
Uh, I'm not a legal expert. I would request you to talk to lawyers who may be better at reading code. But broadly, there are companies attempting this in different ways. Depends on geography as well, of course. So I think Mohash tokenizes loans given out in emerging countries and provides yields on top of tokens. I think there's a company called Zoth, which is fractionizes or
Mohash and what is the spelling?
Mohash and Zoth, ZOTH.
Okay.
They great founders both of them. Zoth, I think, securitizes rental real estate and allows you to invest in that in a fractional manner and then earn yield again on top of that. Compliance is always going to be an issue. Like I said, right, on-chain scarcity, off-chain scarcity, on-chain abundance. Once you're off-chain, right, you're limited by geographies and legal laws. In India, you will have issues with, with bringing in money, double taxation, GST, etc., etc. So, I would recommend getting a lawyer's opinion. I'm sorry, I don't have much to add.
Not at all. I mean, don't say sorry, because actually the reason why I'm asking is because I'm already in touch with lawyers and chartered accountants who are specialists in this, and we know the constraints that we have. So the constraints are there. They are actually practical legal constraints. So that is fine. Now, what I'm thinking of, because blockchain doesn't fall into because like you rightly said, it is an independent entity which is not by a government. Like after gold, this is the only second thing which people are promoting themselves. So can I get support from the community in a manner that there is an enablement of trade from US dollars and Indian rupees which is enabled by blockchain, in which I can mitigate the hedging of the currencies as well as the regulatory requirements?
I'm not sure. I'm really sorry. I may not be able to help you out with this question.
Got that.
No issues here, Amit.
Got that. Thank you very much.
Discussion. You already see that people have so many follow-up questions. I think this would have gone easily half an hour, 45 minutes more. So again, I'm sorry, Chirag. I'm feeling bad for Chirag now. But
Yeah, it's fine.
ठीक है, चलो. Okay, so Vatsal, one last question, and then we'll close it off. What do you think about the startup winter right now?
startup
The
winter.
whole funding winter which is happening.
Late stage has been affected because when Fed raised rates, rush to have dollars in hand to pay back the Fed. So everybody wants liquidity, hence nobody wants to pay up large prices for startups, and their access to capital has gone down. But early stage, I don't see an issue. Great founders
Yeah.
building great products will get funded. When you're this early, as like even not even post couple stages post us, right? It's still a 5-7 journey for you. Aaj ka cycle bears little effect on the outcome that you will create.
Yeah.
So if you're starting up, it's still a great time. There's still capital coming in. Early stages may the chasm has become wider to go through multiple rounds to reach a series B or a series B. It's going to be tougher, but that only means you will have to enforce a lot more discipline on yourself to make sure you build a thriving, sustainable business.
Yeah.
But otherwise, nothing else. Yeah. We've invested in 35 companies this year already. So
Interesting.
we keep investing, and it's
Cool.
not going to stop us.
Cool. Thanks a lot, Vatsal, for this time. How was your experience with this podcast? Not a very conventional one.
Yeah, great fun. Yeah, I love that there was conversation, there was banter. One of my pet peeves is that many a times I keep droning on, and then I keep droning on, and then that's it. That's the hour, and I don't even realize the podcast is over, which sucks because you don't get to cover topics and you don't get to have conversations with interesting people. This was a lot fun.
Yay. Good. Thanks a lot getting that
Great.
validation from you.